Good morning. My name is Richard Wexler, and this is Caring in America, the podcast for caregivers and care recipients. So, on every episode, little update: who am I and why am I doing this? So, wind the clock back about 19 years now to 05. My wife and I married later. 2 small children, one 11, one 7, and we start getting phone calls. And those phone calls turn into 4 phone calls, both her parents and both my parents, who are now extremely ill. And unfortunately, we are like most Americans out there. We really hadn't talked about this and we really hadn't planned for it. And this adventure goes on for 14 years until the last parent passes at 96 in 2019. Go back again in the clock about 16, 17 years, started my company, Points of Life, started educating people across the nation about this little word that I could barely spell called care, what it meant, and all the pieces thereof. And then about a year or so ago, started getting the idea that I wanted to reach out to even more people and started the podcast. We have a special guest today. I'm going to start by introducing him with his bio. For more than 3 decades, Patrick Johnson and his professional designations are CLU, AEP, CLTC, has collaborated closely with financial advisors, offering expertise in estate planning and long-term planning. Patrick has contributed to the financial services field as a former board member of the Greater East Bay NAIFA Association and the Sacramento Financial Planning Association. Additionally, he attained accreditation as an AAP, Accredited Estate Planner. Patrick's professional journeys encompass roles at Smith Barney, Citibank, and MetLife. And on a more personal note, he's a great sports enthusiast, devoted follower of the Golden State Warriors and the San Francisco Giants. And he enjoys a good day on the links and spending quality time with his wife, children, and grandchildren. I'll call him Pat today, if that's okay. Pat, are you there?
Yes, good morning, Rick. Thank you, and pleasure to be here.
You're very welcome. As I talk about a lot, one of the biggest issues, and obviously it was an issue for my wife and myself, is this cost of care. We talk about care, and unfortunately, a lot of people don't really understand it's expensive. So I've spent a lot of time over these years trying to find the different ways that people can pay for care. I've come up with over 10 different ways. We've talked about that on past episodes. We'll probably talk about that again. And one of those ways is long-term care insurance. And the unfortunate part, and Pat can correct me if I'm wrong, but a lot of people don't really understand what long-term care insurance is, what it does, and how it works. So I'm going to start right there, Pat. What is long-term care insurance? What are the features and benefits that the consumer is buying?
Great question, Rick, and a good way to start this morning. Hello, everybody. Really, a long-term care plan is going to provide tax-free income to the insured. That's the whole goal. When somebody goes on claim, and that's an important word, Rick, that means they have failed 2 out of 6 what's called ADL, activities of daily living. And that's eating, toileting, bathing, transferring, dressing, continence. If The doctor writes a letter to the carrier. They can't perform 2 out of 6 of these for 90 days. Then the client fills out a claim form. They go on claim. So, what are the features and benefits of most long term care products? Um, there's a daily benefit. What am I buying? $150 a day, 200 a day, 300 a day. So that's the key feature is how much am I going to start with? And then do you want inflation? You don't have to have inflation, but that daily benefit will stay the same. Or you can have a 3% growth or a 5% growth. That means your benefits growing every year at 3 or 5%. It's very common today with what you mentioned with the prices going up. And we'll talk about pricing later. Then you have to decide how long do you want this coverage to last? 2 years, 3 years, 4 years, 5 years, 6 years? Some plans have unlimited. So obviously, the longer you go out, the more expensive it is. The higher your daily benefit, the more it is. One of the key features the last couple of years, Rick, is there's a new rider that allows zero elimination period for home health care. Typically in the past, it's always been a 90-day elimination, but you can get a zero elimination today for home care. And of course, COVID kind of really put that rider in focus because everybody wanted to stay at home. And that's usually where people start care is at home before they hit assisted living. So in a nutshell, Rick, that's the features and benefits and why you would buy a product.
So, excellent information from a procedural stance. Let's work. I'll make up a scenario. Maybe we can keep that scenario moving forward. So, someone has bought a plan that we'll talk about the procedural aspects of that. Let's say this is mom. Dad's already passed. Mom's in her early 80s. Some things start happening to her, and she can't fulfill two of those ADLs. If she can't fill out that claim form, can someone else do it? How does that work?
Absolutely, Rick. Relatives usually are there. Home health care services can help. Um, Obviously, you're going to be having a doctor visit where he's going to do a plan of care that they're going to submit. Um, and that is not that hard to do, Rick. Maybe on the phone a little bit with the carrier, but their carriers have been around so long now, Rick, that the claim time is getting very good. They're understanding, and it's a big feature of the plans that the carriers are doing. And of course, the only two things are going to happen, Rick. They're going to go on claim or they're going to pass away. And so you've got one of two types of claims, and they're very good at them.
So you mentioned some of these products, dollar amount, how long they last, so on and so forth. If you can talk in a little more depth about what type of products are out there so our listening audience, and I'm hoping, hope is a big word, that when they listen to this, it may kick them in the backside to go out there and get a long-term care insurance policy. But what type of products are out there, Pat?
Yeah, the listeners got a piece of paper and a pen handy. There's going to be 4 words for you. One is traditional. And that's the plan, Rick, most people are familiar with or heard of. It started many, many, many years ago. You get a daily benefit. Let's say it's 150 a day. Maybe you got some inflation. You want it for 3 or 4 years. You're going to pay this on a monthly basis or maybe annual basis until you go on claim. There's no life insurance component. There's no annuity component. It's just straight long-term care. And that's what it's there for. The second one that came out maybe 20 years ago came out from the industry. Basically, clients said, well, if I buy a traditional plan and I just die, kind of like your, homeowners or something, I've got no benefit from it. So they started having products that are called hybrid. That's the second type. It has some life insurance component to it, Rick, and long-term care. So if that client never goes on claim but dies, then there's a tax-free death benefit to the beneficiary. And those have been around for about 20 years or so. They used to be all single pay. Now you can 5 pay, 10 pay, you can pay to 65, pay to 100 based on your age. So the consumer today has lots and lots of choices. The third type is for the younger client. Um, it's life with a long term care rider. As an example, Rick, my daughter in law, who's a doctor, got married to my son, needed life insurance. Well, we sold her $500,000 of life insurance with a long term care rider at 4%, which means if she needs long term care down the road, she can start taking the death benefit tax free every month on claim. And it's a great way for somebody 30 to say 55 or 60 that needs a lot more life insurance, but would like to have a living benefit rider like long term care. The fourth way is relatively new, Rick. It's an indexed annuity. We've got one approved in about 43 states now. This is really revolutionary. It's an index annuity with tax free income, long term care, and it's medically underwritten, Rick. It's a half-hour interview with an underwriter, and it's all about cognitive and physical ability based on your age and the underwriting category. You can buy this index annuity. Minimum premiums $50,000. You can add to it. Issue age is 55 to 80, which is kind of the sweet spot. And the annuity is growing. It's got a fixed account plus 5 or 6 S&Ps. There's never been a product like this out there, Rick. So you can see the industry still creating products for that consumer out there. And the key behind this product is you can never be declined for coverage. And if you've already been declined, they don't care. It's really super. So those are the 4 ways that any consumer across the country can look at a plan.
This is fantastic information. That's a lot of variety for the consumer out there from a procedural perspective. It's a lot for them to grasp. They obviously need an expert like you to interpret these different types of plans. Can people, I mean, we'll talk about you. We'll also talk about across the country. I mean, can they work with someone over the phone? Do they normally have to work with someone in person? An agent like yourself? How does that normally work?
Well, Rick, with today's technology, you can buy one of these plans across the country via the phone. Most of these applications today, Rick, are what we call a drop ticket. It's all electronic today. I just did that last product, that index annuity, with a good friend of mine in Arizona who had been declined for coverage. We had a couple conversations, sending the proposal and the brochure, went over it. He liked what he saw. He wanted to put 100,000 in, which is pretty typical. And we just got him on the phone and asked all the medical questions that the carrier asks us, name, rank, serial number, assets, suitability questions. We hit a button and submit it. Then right away, we set up the 30-minute interview with the underwriter, and they contacted him in a couple days. So it's very easy to apply, and you can still do paper apps through the mail. It just depends on the carrier and how someone wants to operate.
Again, fantastic information. Going back a little bit, you talk about different daily rates, you talk about length of time, and I know every individual is different. What should someone be thinking about when they're thinking about that daily rate, how much they may get, when they're thinking about how long this policy may last?
Yeah, a great question with all those choices out there now, Rick. That's one of the benefits having a nice long conversation with the client, because some of these things are considered, an asset sale, like if you're going to put in 100,000, or maybe it's a cash flow sale where you're going to spend $500 a month. So it really depends on the budget the client's got and the asset that they have. So a lot of times people will call up and say, "Show me what 100,000 buys." I might start with, what state are you in and city, because you're going to have different cost for care. And then, let's start with a daily benefit. And I sort of back into whatever they tell me. If they say, PJ, spend 500, or if I got 100,000, what's it buy me? And a lot of times I'm showing multiple products, Rick, based on the conversation, um, what's going to be palatable to them. And of course, do they need life insurance or not? Are they insurable or not? Those types of things.
Very interesting. Fantastic information, Pat. And one of the things I've talked about when I've talked to people through the speeches I've given, and I'm nowhere near a long-term care expert, but the fact they want to start thinking about this sooner rather than later. And one of those reasons, and again, I don't want to put words in your mouth and you can correct me, but one of those reasons from a medical underwriting standpoint. Can you talk about that and then what's involved with that medical underwriting?
Absolutely. And with all those products out there, there are some moving parts. But keep in mind, if you're buying long term care, Rick, you're talking about morbidity. What are the chances I'm going on claim? And then if you're buying life insurance, it's mortality. What's the chances of me dying? So the consumer needs to understand where the carrier's coming from. When I'm talking to somebody, I'm asking a lot of pre submission medical questions, because we don't want to waste anybody's time, especially doing an application if they're going to be declined. So all the carriers have pre-submission forms where you can ask what kind of medication the client's on, um, what kind of health problems they may have had in the past. We can email underwriters client information, give them an idea of what's going on, and then based on the product, um, you may have a half-hour phone call, or if you're buying a lot of life insurance, you may need an exam. But for the most part, um, Rick, we try to do as much of that up front, so we're meeting clients' expectations on their health. And most of these products will go to age 79 or 80, but you mentioned earlier, it's best to start looking at this a little younger. 50 to 65, it's going to be cheaper, and you're going to be in better health. It's just the nature of the game. So I'm with you. We're trying to get younger clients to start looking at this as early as possible.
So let's go back to that scenario and let's round out mom's age to 80. Mom has fallen, she's broken her hip. We'll use two scenarios. One, she's fallen, broken her hip. One, she's been admitted to the hospital, and unfortunately, there's been a diagnosis of cancer. So mom's flat on her back in either scenario. What are the odds at 80 years old, broken hip, 80 years old, with a diagnosis of cancer? Because I've had many people look at me and go, well, mom's flat on her back. I need to go get long term care insurance. Is that realistic? Is someone like that, broken hip, cancer, going to qualify most of the time?
Probably not, Rick. Probably not, and that's why I said. And some of the companies put out, you know, a 40-page underwriting guide to talk about, um, things that the client may have. Are they on a walker? Are they got Parkinson's? I mean, and that's what's nice about working with the carriers, because we can get that information from the client, email it to the underwriter without their name on it, and just ask them. A lot of long-term care today is kind of thumbs up or thumbs down. There's no table ratings like when you're buying a life insurance policy, and that's unless you're buying the annuity one, the new one. There's no medical questions on that. They're not checking prescription drug base, and they're not checking if you've been declined before. But like I said, every product's going to have a little bit different underwriting aspect to it, Rick.
Sure. Again, this is great information. I want to talk about two questions. One will probably lead into the next question. Can you give folks an idea? So let's say they do this. I believe you said it was via cash, where they're paying a premium every month, maybe every quarter, the way it's set up. Can you give folks an idea of what they're looking at from a cost perspective for long-term care insurance?
Absolutely. In fact, I'm doing a long-term care seminar in the Bay Area in March, and my two lunch speakers um, have both been in the business over 30 years. One owns a home health care agency, and the other is an executive director of an assisted living facility. And I've got them both on the phone this month and just said, we're going to be showing some live proposals. Tell me what rates are costing in the East Bay. Now, the East Bay for our listeners is east of San Francisco. Uh, and home health care today, Rick, there is $42 to $48 an hour.
Ouch.
Now, of course, wherever you are in the country,
Ouch.
you can call a local home health care agency and get an idea of what those costs are going to be.
What are you seeing on a similar basis, or do you know the number for an assisted living in the East Bay?
I think the trend, Rick, the last few years is to get something in place, but not try to cover the whole enchilada because care is getting expensive. When I talked to the executive director, she's in San Ramon, California. It's a brand new facility. The doors are about to open, and they're going to start at $7,000 a month, Rick.
Wow.
Um,
Wow.
and that was an eye opener, and it's going to be an eye opener to the financial planners coming to my seminar, who I help teach and educate, so they can go back to their clients and assist them as well. But we've been running most of our proposals, and I'm in the Sacramento area. I'm about an hour and a half east. We've been showing 4,500, 5,000 to start, with probably a 3% inflation, um, 3 years maybe, Rick. Again, it's up to the client
Sure.
what the cash flow is and what their assets might look like. But we're trying to put something in place.
Sure. Just folks in my listening audience, just from based on what Pat was talking about with the costs in the East Bay, in the Bay Area in California, we've talked about this. On average right now, in-home care across the country is about 35 an hour. A little cheaper, but do the math. And we've talked about this a lot. You live 100 miles away or multiple states away, and you want to take care of mom, and you can't, and you need a professional in the home, and they're charging on average $35 an hour, and you maybe need them 24 hours a day. You can do the math. I don't want to scare you. And then also from an assisted living perspective around the country, a little bit less, but still very expensive at about $5,000 a month. So, folks, that's why I'm so glad I have Pat on today. We're talking about this. We're trying to get you folks and you folks to talk to other folks about long term care. And I'm about to ask Pat another question in a second. And I know it may be expensive, but think about the numbers we're giving you. $35 an hour average home care around the country and $5,000 on average at an assisted living. So when you're talking to folks, Pat, and maybe they start hearing the numbers that you're giving them and they want to pay from it on a monthly basis and they start balking about the cost, what do you say to them?
Well, I think the first question I ask is, what can you budget? And you tell me what you can budget, and I'll back into it. We may have to lower the daily benefit. We may have to not have inflation. We may have to go to 2 or 3 year plan, um, or you just don't have a plan. I mean, um, there's going to be people out there that none of those numbers are going to work, Rick.
No, I get it. And again, going back to when people should start thinking about this, on the youngest side, what age bracket, with all these different products, what age bracket would you really encourage people to reach out to someone like you and look at this? Because when I talk all the time, statistics bear out that 95% of us are going to need care at some point. That could be a few hours, that could be a few months, that could be many years. 5% of us go to sleep one night and don't wake up. And I know this, my numbers are a lot higher than what the long term care um, industry talks about, but I want people to understand this is most likely going to happen in your life or a loved one around you, and you really want to get prepared. And I love all this information this Pat is putting out there and being able to back in what's affordable for folks, because I really want to avoid, if I'm meeting people in the hospital, which I've done a lot over my time, and they're looking at me and saying, I need to get mom long-term care insurance. And as Pat and I have talked about, at her age and what's wrong with her, there is a strong likelihood that she's not going to get a policy. As we get ready to wrap up, Pat, I mean, just an overall philosophy that you could give people about looking into these different products, hopefully at an earlier age. And a word that I use on every one of my episodes, that four-letter dirty word called plan, getting ahead of something. Getting ahead of something happening. Do you have like an overall philosophy you could give folks?
Oh boy, Rick, that's a good one. I mean, issue ages today, 30 to 80. I mean, that's a big span, Rick, where you can get coverage of some sort based on the client's real need. And with the advent of this new product where you can't be declined, there are going to be a lot of people out there that either have been declined or are in bad health that can still get long term care. Again, the minimum is 50,000, but there's a lot of people out there that want to get some plan in place, and I think it behooves everybody to take a look at the numbers and see what's there, and then reach out to the kids. I mean, are your children going to be doing this care for you? Are they in state? Are they going to quit their job and move from New York to Idaho and take care of you? A lot of family conversations around that. It's the big picture right now, Rick.
No, and I very much appreciate that. And that falls in line with everything I talk about, exactly what you just said. You live multiple states. I mean, you folks, you need to have this conversation. I'm pleading with you to have this conversation. I've said 2024 is our year for an action plan. That action plan in your family, if you're the adult child, whether you're 35, 45, 55, 65, maybe you're 70 with someone over 90, you got to talk about this whole issue of something happening to someone. And then at an earlier state, how are we going to pay for care? Can mom qualify for a policy like this? Let's see. Let's reach out to someone like Pat. And we're about to give his contact information in a second. But folks, this is so important. And as I've said, I don't know how many times, when you get to this and something happens to someone you love, cost of care, and Pat talked about it. Realistically, in your family, you live a long way from mom, dad, the in laws. Are you going to quit a job? How are you going to make income and then go care for that loved one? This really needs to be a conversation that you're having. I call it a family conversation within the family. As we do get ready to wrap up, Pat, if people want to reach out to you, what do you want to give them? A phone number, an email, a website? Please let them know.
Sure, Rick. I'm located in Sacramento, California. Cell phone number is 925 area code 200-9482. The email is easy. It's patrick.johnson1952@yahoo.com. Happy to talk to anybody on the phone.
That's awesome. And then for my clarification, do you work with people in any state, or how does that work?
Sure, Rick. If I'm not currently licensed in that state, I just go get a non-resident license, take the CE exams. It's not a big deal today. You got to have the product approved that we're talking about. So, each state, Rick, has its own insurance commissioner, product approval, types of products. So you have to kind of peel the onion back and see what state the client's in and what's available on the market.
Fantastic information, folks. And if you want to reach out to me, I encourage you comments, questions, concerns. If you're an expert in the elder care industry and want to talk to me, I'm about to give you an email. It is eldered2023@gmail.com. Please reach out. I thank Pat again for a wonderful episode with a lot of information. And as I say on every episode, folks, until we meet again, have yourself an awesome day.